Chapter 1. The Case That Wasn't What It Seemed. Martha Stewart went to prison for insider trading in a case that wasn't actually insider trading. That one sentence pretty much sums up why her story still feels so strange, and why she became the unexpected face of white-collar crime in early 2000s America. Everyone remembers the mugshot, the media frenzy, the domestic diva behind bars headlines, but fewer people actually know what she was really convicted of, or how a single stock trade worth less than 50 grand turned into a full-blown federal scandal. So this is the story of what actually happened. The stock tip, the cover story, the FBI interviews, the trial, the prison time, and the surprising way Martha Stewart managed to turn a felony conviction into just another chapter in the Martha brand. Chapter 2. Martha Stewart, Corporate Powerhouse. To understand why this one trade mattered so much, you first need to understand who Martha Stewart was in 2001. By then, she wasn't just the woman who taught America how to fold napkins and roast a perfect turkey. She was a full-blown business empire. Her company, Martha Stewart Living Omni Media, had gone public in 1999. The stock had made her a paper billionaire, and her brand stood for perfection, control, and trust. She was on TV, in magazines, on shelves at Kmart, and she even sat on the board of the New York Stock Exchange. That image, cool, competent, untouchable, is exactly what made her eventual downfall so mesmerizing. This wasn't some shady, unknown executive getting busted. It was America's most famous homemaker, suddenly pulled into the world of Wall Street scandal. Chapter 3. ImClone, Erbitux, and the High Stakes. Now enter ImClone Systems. ImClone was a biotech company whose big hope was a cancer drug called Erbitux. And in late 2001, everything hinged on an upcoming decision from the US Food and Drug Administration. If the FDA said yes, the stock could soar. If the FDA said no, or even not yet, things could get ugly. At the center was ImClone's CEO, Sam Waksal, a charismatic scientist entrepreneur with deep ties to New York's wealthy social scene, Martha Stewart included. The two moved in similar circles and knew each other socially. In fact, Waksal's family and friends held ImClone stock in accounts at Merrill Lynch, managed by a broker named Peter Bakanovich. That detail, those accounts, that broker, is where the trouble starts. Chapter 4. The Secret FD, a news and Waksal's sell-off. Behind the scenes, late December 2001, Waksal learned something the public did not yet know. The FDA was about to reject or delay ImClone's application for Erbitux in a way that would be very bad for the stock price. According to regulators and prosecutors, Waksal started trying to dump ImClone shares, his own and family members, before that negative news became public. That's textbook insider trading, using material, non-public information to avoid a loss or make a profit. Merrill Lynch's records showed a flurry of sell orders from accounts linked to the Waksal family in the last days of December 2001, right before the FDA decision was announced. Among the clients of broker Peter Bakanovich, Martha Stewart, who held 3,928 shares of ImClone. Chapter 5. December 27, 2001. The Trade. On December 27, 2001, Martha Stewart sold all 3,928 of her ImClone shares at about $58 per share. The next day, December 28th, the bad news hit. The FDA had refused to accept ImClone's application as filed, and the stock plunged about 16%. By selling when she did, Stewart avoided a loss of roughly $45,673. That number, 3,928 shares, $45,673 avoided, would be repeated endlessly in the media and in court documents. In the world of Wall Street, this is pocket change. In the court of public opinion, it sounded like a smoking gun. The question was, did she sell because she got a tip that Waksal was dumping his stock, or because of a previously agreed arrangement with her broker? Chapter 6. Not charged with insider trading. Here's where the nuance matters. Martha Stewart was never criminally charged with insider trading. The core allegation from the SEC in its civil complaint was that she sold after receiving material, non-public information that Waksal was selling. But the criminal case that actually sent her to prison was not about whether she had insider information when she sold. It was about what she said and did afterward, once investigators started asking questions. In other words, the trade started the story, but the cover-up became the crime. Chapter 7. The $60 story, Martha's explanation. So what did Martha and her team say? From the beginning, Stewart and her broker Peter Bakanovich claimed there was an innocent explanation. They said she had a pre-existing agreement, a so-called stop-loss or sell instruction, to dump ImClone if the price fell below around $60 per share. According to this story, on December 27th, her assistant got a call from Bakanovich's office, relayed that ImClone was trading below that threshold, and Stewart decided to go ahead and sell. On paper, that sounds plausible, but federal investigators later argued that this $60 agreement had been invented after the fact, and that documents and testimony were shaped to support that fiction. Chapter 8. Douglas Faneuil and the alleged tip. An important figure here is Douglas Faneuil, Bakanovich's assistant at Merrill Lynch. Faneuil initially backed the story about the pre-existing sell order, but later flipped and cooperated with prosecutors. He testified that on December 27, 2001, Bakanovich instructed him to tell Stewart that Waksal and his family were selling their ImClone shares. That's information that was not public at the time. According to Faneuil, that tip about Waksal's selling is what prompted Stewart's own decision to sell her 3,928 shares. That version of events, broker tells client the CEO is dumping his stock, is exactly the kind of material, non-public information that regulators treat as insider trading. Chapter 9, from suspicious trade to alleged cover-up. But again, instead of charging Stewart criminally for insider trading, prosecutors zeroed in on her conduct once the heat turned on. The FBI and the SEC started investigating ImClone in 2002, and Stewart gave statements to investigators about why she sold. She maintained that she had a standing order to sell ImClone if it fell below $60 and denied getting a tip about Waksal's trades. The government's theory was that those statements were false and that she conspired with Bakanovich to make the story fit. This is where the case shifts from suspicious stock trade to alleged cover-up. Chapter 10. The altered phone message. One of the most discussed details was the phone message on Stewart's assistant's log from December 27, 2001. The message originally recorded that Bakanovich's office called to say that Waksal was selling his ImClone shares. Later, the message was altered to remove references to Waksal and instead reflect something consistent with the $60 explanation. Investigators pointed to this change as a key piece of evidence, suggesting an effort to conceal the true reason for the sale. Stewart's side argued that any alteration was minor and not part of some grand conspiracy. But in a jury trial, tiny details like that can take on huge symbolic weight, especially when they look like someone literally rewriting the story. Chapter 11. The government's narrative. The prosecutor's narrative was straightforward. Martha Stewart and her broker realized the ImClone trade looked bad, and instead of coming clean, they tried to tidy up the facts the way you might tidy a messy kitchen. Except this time, the mess was under oath. The indictment charged her with conspiracy, obstruction of justice, and making false statements to federal investigators, all tied to that alleged fabrication of the $60 agreement and the manipulation of supporting evidence. Peter Bakanovich was also charged, including with perjury and making false statements. The government's lead prosecutor was James Comey, who would later become a household name as FBI director. But back then, he was one of the most aggressive U.S. attorneys targeting corporate misconduct in the post-Enron era. Chapter 12. The Media Circus Trial. The trial began in January 2004 in New York, and it was a media circus from day one. For 6 weeks, the courtroom became a kind of reality show. The perfect homemaker in a tailored suit, the Wall Street broker, the young assistant who flipped, the forensic details of phone logs and stock tickets. The government hammered the theme that no one, not even a celebrity billionaire, is above telling the truth to federal investigators. The defense, meanwhile, tried to cast the case as overkill, a small trade blown out of proportion, a misunderstanding criminalized. Underneath it all was a bigger question. Was this trial really about Martha Stewart, Or was she being used as a symbol in a broader war on corporate corruption? Chapter 13. Guilty on 4 counts. On March 5, 2004, the jury reached its verdict. Martha Stewart was found guilty on 4 counts: conspiracy, obstruction of an agency proceeding, and 2 counts of making false statements to federal officials. She was acquitted on 1 securities fraud count that alleged she made misleading public statements to bolster her company's stock, but the core obstruction and lying charges stuck. Bakanovich was also convicted on most counts against him. Legally, the message was unmistakable. The justice system might not have nailed her for insider trading, but lying to investigators and trying to shape evidence was itself a serious felony. Chapter 14. Sentencing and Symbolism. When it came time for sentencing in July 2004, the spectacle continued. Judge Miriam Goldman Cederbaum sentenced Stewart to 5 months in federal prison, 5 months of home detention, and a total of 2 years of supervised release, plus a $30,000 fine. She was also banned for 5 years from serving as a director or officer of a public company in a related civil settlement with the SEC, and ordered to disgorge about $58,620 and pay an additional civil penalty of roughly 3 times the avoided loss. For a woman with significant wealth, the money wasn't the issue. The prison sentence and the public humiliation were. And in a weird way, that's what made her punishment so symbolic. This wasn't really about financial damage, it was about making an example. The woman who once stood for flawless perfection became, in a way, more relatable. She had fallen, been publicly shamed, done time, and kept going. Today, when people talk about her ImClone saga, they often remember it as that insider trading case that wasn't really insider trading. A story less about the trade itself and more about what happens when you're caught between reputation, regulators, and the truth. And that is the real lesson lurking under the tabloid story. Martha Stewart didn't go to prison because she made a bad investment decision. She went because of what she said and did after the fact, when the walls started closing in. In an era obsessed with public image, she learned the hard way that you can fix a crooked picture on the wall, but you can't tidy up a federal investigation without consequences.